Okay, sir.
Okay, so just pass that on to her.
Okay,
I hope
sir.
she'll be able to make it. Okay, anybody with any questions that you want cleared up on any matter other than this question which we're going to be going through together from from start to end? Any questions arising from anything we did in previous weeks?
You said other than the assignment, sir?
Yes.
Okay.
Clarification, not teaching. Hello?
Yes, no, sir.
You're looking at something, Debbie?
Yes, sir.
Okay, so I can just wait for your question to be asked?
Oh, no, sir. I have two questions, but one is in relation to the assignment.
Okay, we can take that as well. We can take that because that's due on Tuesday. Go ahead, Debbie. You saw my release. Ms. Thomas would have sent something to you, yes?
Yes, sir, I saw that.
Mm-hmm. Okay, but go ahead.
My question is, all right, and in particular for question 2.
Yes, that's the one with the budget. That's the one with the budget?
The one that speaks to the net income.
Variable costs and
fixed costs in relation to net income.
Okay, go ahead.
In trying to read it out, I was wondering if some information was missing, or is it that I'm overthinking what it is that you are expecting?
Maybe there is no missing information. You want to, so they're not asking to find information or solve anything, you know. You're really being you're being an advisor and largely being an advisor.
Yes. Okay.
So there's no missing information that you have to find, not at all.
All right, got you, sir.
Okay, yes.
Thank you.
Yes. Any other questions? Okay, there being no other question, let us move into the working of this problem, coconut today. You have the working there, but it is more than just the working. We need to be able to rationalize the figures that we are seeing. We're going to take it from receipts. The first receipt item is the first receipt item is the cash sales. Are we there?
Yes, sir.
Yeah.
Okay, now the cash sales figure, when I sell goods, I get the money immediately. So whatever I estimate my cash sales to be, if my cash sales is $40,000 in January, then under January I put down 40,000. There's no delay. It's a credit sales that represents the delay. So maybe I sold some goods in January, and if I sold them on credit, I'm going to have to work out to see how when do I expect to receive that money. So then, when we read the question, we see that our cash sales for what are the months in question? For Coconut Bay?
Sir, Mr. Roof.
Yes, go ahead, Giovanni.
I just wanted you to clarify something. You said cash sales is money you get immediately?
Yes.
Oh, I was just putting in some definitions and such. I just wanted to clarify.
It is money you get immediately. So it is, I part with the goods. And in other words, if you come to my shop and I sell you some goods, it's a cash sale if when I hand you the goods, you hand me the money.
Okay, sir.
Now, a credit sales is one where I hand you the goods and you give me maybe a part of the money or none of the money, but with an arrangement that I'm going to receive it at a later date.
Okay, sir.
So there's a time lag. We can translate that into the university and student fees. Let's suppose that at the beginning of September, you handed the university a check for the first semester, or maybe the entire school year, the cost of the entire school year. That would be the equivalent of a cash sale. Why? Because you start the program and you hand it over.
Understood, sir.
Now, if there is a delay in payment, let's suppose there's a payment plan and you entered into that payment plan, then that would be the equivalent of credit sales, because you're getting the services of the class and you're paying at a later date.
Okay, sir.
Is that clear?
Yes, sir. Very, very clear, sir.
Okay. So the question said that the cash sale, okay, the first thing, when you have these cash budgets, look on the layout. Now, you have to go to the end in order to start. So go to the requirement. And what did the question ask you for? Giovanni, can I just hear from you what the question asked for?
Prepare Coconut Bay Appliance Limited's cash budget for the quarter ending December 31st, 2025.
Okay, 20x, whatever x is, just write that back. Okay, so if it ends in December, we have to count back, because it means that we have to first of all know that because we're speaking about a quarter, we're talking about 3 months. And then we work back. It ends in December. So what are the other months preceding December? It will be November and October. So at the end of the day, the quarter made up of 3 months will be October, November, and December. October, November, and December. That's what makes up the quarter ending December 31st. A quarter is made up of 3 months. It therefore means that there are 4 quarters in a year. From a calendar point of view, the first quarter will be January, February, and March, 3 months. The second quarter for the year will be April, May, and June. The third quarter for the year would be July, August, and September. And the fourth quarter for the year will be October, November, and December. But that's a calendar quarter based on how the calendar runs. But financial years are not always based on a calendar. Jamaica is a case in point. Jamaica's financial year begins on the 1st of April and it ends on the 31st of March. So let's now just look at the quarters. The financial for Jamaica, their first quarter wouldn't be a calendar quarter. It would be April, May, and June. That's their first quarter. We hearing everyone? Everyone hearing?
Yes, sir.
Yes.
The second quarter would be July, August, and September. The third quarter would be October, November, and December. And the fourth and final quarter would be January, February, and March. So our financial year starts on the 1st of April and it ends on the 31st of March of the following year. The last quarter of our financial year is a new calendar year. January, February, and March would mark the beginning of a new calendar year for the last quarter for the financial year. Is that clear, class?
Yes, sir.
Yes, sir.
Okay, I hear 2 students. Can
Yes,
the rest
sir.
of you answer?
Yes,
Yes,
sir.
sir.
Arno?
I just joined, so I didn't hear what you
Pardon?
said. I just joined, I didn't hear what you said.
Yeah. Hold for me, please, class. Yes, sorry about that. Yes, I'm saying that the Jamaican financial year starts in April. So the first quarter would be April, May, and June. Jamaica's second quarter would be July, August, and September. The third quarter would be October, November, and December. And the fourth and final quarter would be January, February, and March. Okay. Now, in this case, they're asking you for the quarter that ends December 31st, made up of 3 months. So the relevant 3 months would be October, November, and December. Now, the first thing that you saw was our cash sales. And so if we look in the problem as we would have done for our homework, we'd have seen the cash sales figure. Cash sales of 14,000 in October, 29,000 in November, and 44,000 in December. And that would give you a total of 87,000. So when we prepare our cash budgets, we are expected to have a total column, because what the total column tells us is what is the amount received for the quarter. So yes, I know what I receive for each of the months in the quarter, but I also want to know what I received for the quarter, which will be
Sir, sir,
Go ahead.
you had said earlier that this is this amount that is received, cash that is received.
That's the cash sales I'm talking about.
Yeah. So why is that estimated?
Okay, because it is going to be done before the fact. A budget is never prepared. A budget is never prepared on the day. I can't prepare a budget for yesterday. A budget is futuristic in nature.
Okay.
So I have to prepare a budget before the fact. So everything is an estimate, you know.
Okay.
Everything is an estimate. If I'm preparing, if I sell box juice by the side of the road and I'm doing a budget, it will be a budget for the future. So the future could be tomorrow. Can I say with certainty how much I'm going to generate in terms of sales for the box juice?
I understand. Okay.
Okay. So
Okay.
it is futuristic in nature. So everything is an estimate.
Okay.
Yes. So are we comfortable with the issue of the cash sales?
Yes, sir.
Okay.
Yes.
Let's now move to credit sales. What did it say about credit sales? Sales on account is the credit sales. And the credit sales is based on projected cash collection of sales. When we see sales on account, we're talking about credit sales. Now, if I take any month's sales, we're looking at any month. Let's start with July. 70% of it in the month following the sale. So if I'm talking about July sale, what's the month following the sale?
August.
August. And 20% in the second month. What would that second month be?
September.
September. And 6% in the third month. That third month would be?
October.
So, yes. Hello?
Yes, sir.
Morning. Did I work out those figures for you, class?
No,
Did I do the spread for July?
It is again, sir?
Did I do the spread for July? Let's look in sheet 2. Let's look in sheet 2. Yes, we have the spread.
Where did that come from?
Well, you're going to work it out. So everybody's going to take the calculator out, because I guarantee you there are 6 errors in there.
Okay.
6 errors in the workings.
Not this time, sir. Not this time, sir.
6 errors in the word. You won't know until you actually put your calculator to it.
I worked it on my own. Never even seen that.
So you didn't see these. So let's now spot the error and win big prizes. Okay, so let's rationalize it now. 70% in the month following the sale. So what we're going to do, we're looking at July. So in the corner, it means that we're looking on that month's sale. And the sale for July is 130,000. So we're going to find 70% of that. And 70% of that we expect to receive it. Everything is about expectation. So 70% of that we'd expect to receive it in August. So let's see if 70% of 130,000 is 91,000. Let's see. Get your calculators out and do this stuff. Is it 91,000?
Yes, sir.
Yes.
20% of it is, so we're not yet ready to see the final figure. We're going to have to, the real months that are of interest to us will be October, November, and December. So even though I'm slotting in some months that are not relevant, I'll ultimately focus on October, November, and December. So my sales for July is 130,000, and I'm going to receive 70% of that in August, 20% of that in September, and 6% of that in October. Now, really, what I'm interested in is that 6%. 6% of 130,000. Is it 7,800 class?
Sir.
Yes, sir.
Everybody working with me?
Yes.
Yes.
Work with me next year.
Working
sir.
with it.
Okay? Those who don't work with me this year will work with me next year. Please make it this year. So I know some of you might be doing other things. You pay the price. Work with me now. Okay. So are we comfortable with everything in that line beside July going across the 91, 26,000, 7,800? Are we comfortable with that?
Yes, sir.
Yes,
Okay. How did I get, let's now move to August. With your permission, let's now move to August. How did I get 72,800 in September? Tell me about that, Debbie. Tell me about that. How did I get that, Debbie?
All right. So the sales amount, the cash, what do you call it, sir? The cash, not cash, the credit sales was $104,000. And
How
because
much?
$104,000.
That's correct, yes.
And because you did it, you got it in July, the first payment of 70% will be due in September.
We got it in what month? The 104,000.
104,000 was in August.
Right, so the first month.
So the first payment would be due in September.
That's right. And that amount is?
70%.
70%
of the $104,000.
Okay, check to see if I made an error.
2,800.
Remember, there are 6 errors that are deliberately made.
No error, sir. 72,800.
Maybe it wasn't there. Okay, and then 20% will be received in what month?
20% will be received in August, September, October.
So 20% of 104,000.
Is 20,800.
Okay, was that where the error was?
No, sir.
Okay, and then 6% will be received when?
In November.
In November. And 6% of it is?
4,000 give you $6,240.
6,240. Great. Now, Belinda. Belinda?
Yes, sir.
Okay, I'm going to call on you to do September. So I'm going to ask you some questions. What is my sales, my credit sales in September?
In September, it is 128,000.
128,000. tell me the months over which I'm going to receive this 128,000.
October, November, and December.
Okay, so what is going to be received in October? Now you have to work it out because believe you me, there are errors in the question, deliberately so.
So it's
20. Just look on the figure and tell me, work it out.
70% of 128,000.
That's right.
89,600.
89,600. Okay. And that would go under October.
Right?
Mm-hmm.
And then 20%, 128,600, 128,000. Times 25,600.
Okay.
Then 6% in December.
Mm-hmm.
7,680.
Okay, great. Mm-hmm. So the sales that I make in September, I'm going to receive the money in October, November, and December. Okay, that's correct. We're going to call on Aleni or Aleni, not sure how to pronounce it, but you know who I'm talking to. Aleni Lewis. Aleni is absent. Okay, we'll take note of that. Aleni is absent. Moving down. Can we scroll down a little to see the other participants? Okay. Where is Aleni? Aleni put up her computer and disappeared on the guise of being present. Okay, just send a word out, class rep, that if when I call on a student, they don't answer, they're absent. Okay? Is the class rep there?
Noted, sir.
Okay, so just tell the group that when they think they put up the thing and they think that will make them present, if they're not able to answer, then they're absent. So Alani is absent unless she makes contact and answers a question in the course of the evening. And if we have enough absences, well, we know how it will go. So Tricia, can you take over what Alani should do? We're now looking at the month of October. Tell us, Tricia, how much we have in October? What's sales for October?
135,000.
That's right. Now tell me the months that it's going to be received.
November and December.
Only 2 months?
And it would also be January, but since we are only focusing on the third quarter of the year, then yes.
Okay, yes, well answered. Okay, now tell me what percentage will be received? What's the first percentage to be received?
So the first percentage to be received is 70%, and that's in the month following the sale.
Okay, so the month following the sale would be?
November.
November, and 70% of it would be?
One moment. So 70% of it would be 94,500.
94,500. That's right. Walk us through further, please. What's the next percentage to be received?
20%, and that's the second month following the sale.
Yes.
And that's 27,000, which will be received in December.
Okay, tell me, even though we're not interested in it, how much will be received in January of the following year?
Give me a second.
Yes.
So that's 8,100 in January.
8,000. That's right. That wouldn't be, we wouldn't be interested in that. Okay. Okay, so is Alane back or Alene still absent? I'm just not able to see all the students' names to call on them. Is there a volunteer? That's the best thing. Do we have a volunteer for November?
Go ahead, sir.
You going ahead, Giovanni? Can I hear from you then?
Yes, sir. So, November.
First thing, what's your sale in November?
That's 142,000, sir.
142,000, yes.
Yes, sir. So 70% of that will be received in December, sir.
Yes.
And 70% of that is 99,400.
Is that correct? Are you sure?
Yes. Yes, sir.
Okay. Tell me, what other percentage will be received?
Well, the 20%, sir, and the 6%, which will be received in January and February, respectively.
Okay, tell me what will be received in January. How much will be received in?
Okay, sir. In the month of January, we would have received 28,400, sir.
8, and what will we receive in February?
In February, we would receive a total of $8,520.
That's correct. That is correct. Well, we're not interested in it, but for the arithmetic exercise, we're going to take us through it. But we're not interested in it. We're just interested in what we expect to receive for the quarter ending December 31st, which should be made up of October, November. Okay. And of course, December would be received in what months? Anybody can answer that? December will be received in what months?
January, February, March.
And March.
January, February, and March. Okay. Now, we have filled in our figures for October, November, and December. And when we fill in those figures, we arrive at those totals. But it could be wrong. So please check them to see that the totals that we're seeing on the October, November, and December are correct. Are they correct?
Yes, sir.
Okay. So they are correct. Where is the error then? Let's see. Okay, so we fill them in. If we go back to the sheet now, the sheet 1, if we go back to sheet 1, we will see those totals. 118,200, 126,340, and 134,080. And when we add across, please add across because maybe that's where the error is. When we add across those three figures, it's 378,620 correct?
Yes, sir.
Okay. So where you have to find the error. Now I see something else on the credit sales because what we're doing, we're capturing our receipts first. We have note receivable. And the figure that we're seeing is 13,000. Now, I was looking for that and I couldn't find it. Can somebody help me to find it, please? Where did it come from?
Sir, repeat.
Where did we get the 13,000 from?
Sir, it's the not receivable there. Not receivable in October.
Oh, note received. Thanks. Thank you. What would I do without you, students? Okay, so note receivable in October, 13,000. And so we have that. We expect to receive that. Now let's talk a little bit about it. What's a note receivable? It's an amount that we had lent somebody and we gave them a promissory note. And they gave us a promissory note saying that they promised to pay us this 13,000 in October. So that's what we're seeing under the month of October. We expect to collect from that borrower $13,000 in the month of October. So question, let's pause. Are we following what's happening, class? All 18 of you gathered. I say one student ran away. Donna Brown, are you with us?
Sir. Yes, sir.
Yes, sir. Following.
Okay. Okay. Are we comfortable with all components of the receipt? Can we add down to see that these figures are in fact correct? 145,200. 155,340, 178,080, and 478,620.
Yes, sir.
Yes, sir.
All of them correct. Okay. Any questions arising from the receipts before we go on to the payments?
No, sir.
Let us now move to our payments. And the first thing I'm seeing is credit purchases. And I'm a little confused because I don't see any 116,400 anywhere. I don't see any 108,640. And I don't see any 124,160 anywhere. Can somebody help me with this, please? Anybody?
Sir, we get those figures, sir, when we calculate the 3% discount, sir.
Yes.
So the question said cash disbursement for inventory are made in the following month, purchase using an average cash discount of 3% for timely payment.
Yes.
So we calculate for the quarter that we need, sir, which is October, November, and December, sir. But as it said, cash disbursement for inventory are made in the following, in the month following purchase, sir. So we do for October, the cash disbursement would be for November, sir. I mean for September, sir.
What I purchase in September, I will pay for in October.
In October, yes, sir.
What I purchase in October, I will pay for in November.
Yes,
and what
sir.
I purchase in November, I will pay for in December. But I don't pay the full amount. I pay 97% of the original value. If I get a discount of 3%, class, it means that I'm really paying 97% of the value. So there are two ways of looking at this, class. We can look on the 120,000. We can find 3% of it and deduct it from the 120,000. And we'll be left with 116,400. That's what we expect to pay 1 month after September, which is October. So it's slot under October, 116,400. That's one way. Or if you also put in the calculators, class, 97% of 120,000. 97% of 120,000.
The same figure, sir.
It would be the same. So under October, we would have 116,400. Under November, we're going to have 108,640. But we arrived at that 108,640 by finding 97% of 112,000. Can we all do that, please? 97% of 112,000.
Yes, sir. 108,640.
Or the other way that we could find it is we could find 3% of 112,000. And when we get that figure, we subtract it from the 112,000. So 3% of 112,000, I'm not sure, it might be 3,360. Is that correct? I don't know.
Yeah, correct, correct.
Okay, and then when we subtract it from the 112,000, we would arrive at 108,640. And then the amount that we purchased in November, which is 128,000, we're going to get a 3% discount on that, and we're going to pay that in December. So in November, we purchased goods valued at 128,000. We're going to find 97% of that. And when we find 97% of that, it should give us 124,160.
Correct.
Or we could find 3% of 128,000, subtract it from it, and it will give us 124,000.
Yes, sir.
And when we add across, can we just check to see that the figure of 349,200 is correct? Add those three figures that we computed across, and let's see if it is 349,200.
349,200, sir.
Okay. No, the summing, no, we'll be summing B12 to D12. We're summing B12, C12, and D12. So we have a, so yes. Okay, the other figure that I see is operating expenses. Can somebody tell me where we got those figures from?
Same question, sir. Monthly cash disbursements for operating expense during October, November, and December.
Pause a while. I feel like I'm doing something wrong. I hear one student, and I appreciate okay, Titania, I appreciate hearing that student taking us through, but we have a number of students and I don't feel them. I don't want to hear a litany of problems at the end of the course class. If there's a problem now, stop me and let us talk about it. Now is the time to speak. I don't want to hear at the end of the course. Keep it to yourself then. I'm open to constructive and respectful criticism now. Anything else I'm not interested in. I'm a little worried about why it is that I'm hearing only one student speaking. Is it that the question was too easy? Please provide the feedback. Tricia?
Sir?
Please just get some feedback from the class. If the question wasn't challenging enough, I would want to know that.
Students, were the question challenging enough?
They're probably sleeping now. Wasn't challenging enough.
Very challenging.
I heard that it wasn't challenging at all, so I dig deeper for harder questions. Thanks for the feedback.
Yeah, when you read the question, unless of course you're an expert, I have to admit, unless you're an expert in this field, it doesn't really come so readily. You have to really think about it.
And that's what a challenging question ought to do. It ought to do exactly that, for you to think about it.
So I was actually looking on the format of the last question, and I kind of got ticked off a little bit because I'm like, well, this not really
fit into the same kind of format.
Yeah.
The exam, the final exam.
No, man, I was.
No, the last one.
Yeah,
no, they come in many shapes, forms, and sizes.
Yes, and that's what kind of got me confused.
Okay, so we're going through now. Are we following what is happening now?
Yes, sir.
Yes.
Okay. And you know that if we're going through the numbers and you're not following, you're going to let me know, right?
Yes, sir.
Yes, sir.
Okay. Okay, so we have the
Operating expenses.
Operating expenses, and they said that they're estimated to be 38,000, 41,000, and 46,000 respectively. So we have those figures right there, and we are showing them on the October, November, and December, and we add across to get the total amount that we paid for the quarter. So that 125,000 that you're seeing in the workings, that is the total amount paid for the quarter. Okay, so let's check to see if the total payments are correct. Let's add down and let's see if those figures are correct. Can anybody tell me? Maybe this is where the error resides.
Well, yes, sir, they're correct.
They're correct.
All correct, sir. They're all correct.
Okay, now I just want to point out something to you. When you add down 349, 200, and 125,000, you arrive at 474,200. But if you add across 154,400, 149,640, and 170,160, you should also come back to 474,200.
Yes, sir.
So just bear that in mind. Adding down or across, you come back to the same. Same thing for the top as well. Did I hear somebody calling? Okay. I'm not sure if that's background noise or somebody speaking to me. Okay, we want to look at the summary section. Am I going too fast, class?
No, sir.
No, sir.
Okay. We're now going to look at the summary section to see the constituent parts of the summary section. And so what do we have in the summary section? We have net inflow / outflow, and the word outflow is bracketed. And then we have balance brought forward. And then we have loan. And then we have principal. We have interest, and then we have our closing balance. So we have net inflow, outflow. We have balance brought forward. And you will remember that the net inflow, outflow is what? Total receipts for any given month minus total payments. So what we're seeing on the October, I'm seeing negative 9,200. Is that figure correct?
Yes, sir.
Yes, sir.
Okay. And then for going across, for November, I'm seeing 5,700. Is that figure correct?
Yes, sir.
Yes.
And then I'm looking at December, 7,920. Is that figure correct?
Yes, sir.
And then for the quarter, I'm looking at 4,420. Is that figure correct?
Yes, sir.
Okay. 4,420. Okay, great. And then the line underneath is balance brought forward. We're looking at our balance brought forward. No, on the balance.
You can scroll up the screens, please.
Oh, not sure what is happening here. There's a problem. Okay, I'm not sure what is happening, but you have your working, don't you? Hello?
Yes,
Yes,
sir.
sir.
You have your working. So, okay, we have a little.
You may have to stop sharing and start it again, sir. I don't know if that will help.
No. Don't worry. Look on your working and I'll take you through it. Sometimes these things spoil you and you don't exert anything. Look on your workings. Okay, so what do you have as your balance brought forward? Hello?
$8,800.
That's your opening balance for October. Are we all seeing where that figure came from?
Yes, sir.
Yes, sir.
8,800. And then we had a negative 9,200. And we have a positive 8,800. Question, how much money do we have at this point? Because this is what we call, let me tell you something, class, make a note. When we have net inflow, outflow, and balance brought forward, we're going to do the assessment at this point. How much money do we have if we have negative 9,200 and positive 8,800? How much money would we have? Do the maths, please.
Sir, we don't have any money. We have negative $400.
$400.
We have negative 400. Great. That's correct. We have negative 400. Now, will we need to borrow? That's the next question.
Yes, sir.
Okay. Now, what's the minimum cash balance we must have?
8,200.
Okay, 8,200. But the question said something else. We borrow in thousands.
Yes.
We borrow in thousands. Can anybody just show me where that was said?
When the balance goes down, when the balance goes below 8,200, the bank automatically extends the line of credit in multiples of thousands.
In multiples of 1,000. If I'm borrowing in multiples of 1,000, can I borrow 8,200 or 8,300 or 8,400 or 500? Can I borrow like that?
No, sir.
No, sir.
How much can I borrow therefore? Can I borrow with 3,000 in multiples of 1,000?
You can borrow
Yeah.
$3,000, sir, but you need more in this instance.
Okay. Now, let's establish how much I have. Let's establish that. You told me that I have negative 400. Those of you working the calculator will see it. Those of you looking for something won't find it. But those of you who are working the calculator, you'll come to the conclusion that we have negative 400. Now, how much money do you say we need to have? A minimum of?
8,200.
8,200. So if I have minus 400 and I need to have 8,200, how much money would I need to borrow?
$9,000.
You haven't answered my question at all.
$8,600.
I have minus 400. We're building on the discussion. So don't give me the answer that you see there. I've asked your question and I want you to answer that question. If I have minus 400 and I want to end up with 8,200, how much would I have to borrow?
You would need to borrow 8,600.
I would need to borrow 8,600. That's correct. Minus 400 plus 8,600 would give you the 8,200. But can I borrow 8,600?
No, sir.
No, because the question says that we must borrow in multiples of 1,000. So I'm going to borrow the next highest 1,000, which will be 9,000. I hear people asking, so why didn't you borrow 8,000? But if you borrow 8,000, you would end up with less than 8,200. The question says you can have a minimum balance of 8,200. Minimum means I can have more, but not less. Can you appreciate that?
Yes, sir.
Yes, sir.
I can have more, but not less. So I can have more than 8,200, but not less than. If I borrowed 8,000, then I'd end up with minus 400 plus 8,000, which would give me 7,600, which would be less than the 8,200. So then, I need to borrow, and I borrowed 9,000, and I put that in the loan column. Is it in the loan line? Is the 9,000 in the loan line?
Yes, sir.
Yes, sir.
Okay. And are we comfortable with the working and the rationale for that?
Yes, sir.
Yes, sir.
Start by we fill in 2 lines, and then we ask ourselves the question, do we need to borrow? And if the answer is yes, how much do we need to borrow? In other words, the sum of my net inflow, outflow, and my balance brought forward, if it is less than the 8,200, then I need to borrow. If it is more than the 8,200, then I don't need to borrow at all. The sum of the net inflow, outflow, and the balance brought forward. And we're going to do that for each month. We don't repay in the month that we borrow. Okay. So notice that the repayment of principal and interest in October was blank because we don't repay in the month that we borrow. So we close the month of October, balance carried forward with 8,600. 8,600. Now, the closing balance of October becomes the opening balance of November. So under November, and in my line called balance BF, I'm going to see 8,600. Is that what we're seeing?
Yes, sir.
Yes, sir.
8,600 on the November balance brought forward. And what was my, remind me please, what was my net inflow, outflow for November?
5,700.
5,700. So how much money do we have so far in November?
14,300.
14,300. That is 5,700 plus 8,600, and that would give us 14,300.
Sir, can you say that again? Because I didn't get that part.
Okay, what figure do you have in November? Belinda, that's Belinda asking the question?
Yes.
Okay, you have to follow your working now, Belinda.
Okay.
What do you have as your net inflow, outflow in November?
5,700.
Right. What do you have as your balance brought forward for November?
8,600.
How much money do you have at this point? Belinda?
Yes, sir.
How much money do you have? You're going for your calculator or your
3,900.
If you have 5,700 and 8,600, you would have 8,900.
So 5,700 plus 8,600.
That's right. Do you have your calculator with you?
Yes, 14,300.
That's right. We're adding the figures. We're adding the figures.
Okay.
You have 14,300. Class, do we need to borrow in November?
No, sir.
Oh,
Why don't we need to borrow in November?
No, sir.
because we have more than 8,200.
Because we have more than 8,200. Next question. When we borrow, what must follow borrowing?
Repayment.
Repayment. Now, take a note, please. We're going to repay
The
interest
8,200.
first. We will repay interest first. Donna, you have a question? Ask so that you might live.
No, sir, I don't have a question.
Now, we're talking about 2%, but I spoke out of it. I spoke out of it. Marshall, Marjorie? Or is Marjorie absent?
Yes, sir. I'm here.
There, okay. Tell me about how we're going to pay back the interest. What's the interest rate? What's the applicable interest rate? Read me that line that speaks to the interest rate.
And monthly.
2% monthly interest on the entire loan balance.
Okay. And the loan balance is what we have unpaid at any point in time. So what's our loan balance at this point, Marjorie?
Sir, we had borrowed $9,000.
Right. So how much interest are we going to pay back? Walk us through that, please. Or work us through it.
So 2% off.
2% off?
The $9,000 that we had borrowed?
That's right. And what's 2% of 9,000?
180, sir.
You check that or you're just looking on what is written on the paper?
Sir, I worked it out, sir.
Great, great. Just checking, you know, just checking. Okay, so you notice that on the interest, you have minus 180.
Yes, sir.
Okay, so now we're going to pause to just reflect. We pay this interest of 180. How much money would we have left? I think it was Melinda who told us that we had 14,300.
14,000.
Paying interest of 180. How much money would we have left?
$14,120.
14,120. Now I'm looking on the principal and by the way, your interest must be minus. And why is that going to be a minus? Because you're paying out money. You hearing that, class?
Yes, sir.
Paying out something, it must be minus. You can't leave it without some sign. It must have a negative sign. Because once you're paying out money, it is signified by a negative sign. Okay? So principal and interest are amounts that you're going to pay out. So it should be a minus sign. Okay. So we have interest of 180, negative, and we arrived at that by saying 2% of 9,000, which would be 180. I trust all of us put that in our calculator. And we know here that we have 14,120. Now, principal. How much principal can we afford to pay? Well, we must have 8,200. So if I have 14,120 and I must be left with 8,200, isn't that the minimum amount? Yes?
Yes, sir.
I would take that out and see how much money is left. How much money is left?
5,920.
5,920. Can I repay back? How do I repay? What did the question say?
Pay back in thousands.
You pay back in?
Multiple thousands.
Thousands.
Of a thousand. So can I pay back 5,920?
No.
No.
No. How much am I going to pay back?
5,000.
Why not? I see 5,000 there, but why not 6,000?
Sir, you wouldn't have the 8,200?
Because if I pay back 6,000, I'll be left with 8,120, which is less than the 8,200.
Sir, I don't think I followed that part. Can you go over it again, please?
Certainly, yes, Colette. Okay. Do you appreciate how we arrived at 14,120?
Yes.
Okay. Tell us how we arrived at that, just for the comfort of my mind. How did we arrive at 14,120?
All right, so it's 5,700, 8,600 less the interest payment, which is 180.
How did they get 180?
It is 2% of 9,000.
That's correct. 2% of 9,000 will give you 180. So you pay that out, and how much money are you left with?
Okay. Oh, 14,120. Okay, I see it.
Okay, we're not finished yet. I have about 70 more questions for you.
Okay.
14,120. Okay, next point. So we have 14,120, but we must have 8,200 minimum. You can have more, but not less. So if you want to buy Burger King, but you have to take the bus home, won't you take out your bus fare first? And then say how much you have to buy a Burger King? Burger King?
I would buy the burger and then pray.
Oh.
Yes, sir. I would take out my fare first.
I see you have a sense of humor. Like that. But I know that really you would take out your bus fare and then see what size burger you can buy.
Yes.
So the closing balance is like the amount, is like the bus fare that you have to have. So you have 14,120 you told me. So you have to take out your 8,200. And how much can you pay?
Okay, so the balance, if I take out the 8,200, I would end up with 5,920. But because you're paying in thousands and you want to maintain the 8,200, you would pay the 5,000.
Right, because if you paid 6,000, how much will you have left?
You would have below the, hold on, if you paid 6,000.
Give me the exact figure.
$8,120.
Right, which is below the
8,200.
So you can't pay 6,000. So you're going to pay the next lower thing, which is 5,000.
Okay.
If I didn't say multiples of that, you could pay as your principal 5,920. But because I said multiples of 1,000, then you can't do that.
Okay.
Okay. Any questions? Okay, then let's press on. The next question I want to ask the class. Thank you for taking part. Okay, the next thing I want to ask the class, how much did we borrow? Just remind me, how much principal did we borrow?
9,000.
9,000.
I didn't hear.
9,000.
9,000, right? How much have we repaid so far?
5,000.
5,000.
So how much principal is outstanding?
4,000.
4,000. And we're going to calculate interest on that amount. It's the amount outstanding. The amount borrowed, the amount of the loan outstanding. So 4,000 is outstanding. And we're going to now take percent of 4,000. When we calculate 2% of 4,000, Lisa there? Lisa is absent. Okay, you know that.
Sir, I'm here.
Oh, you're here. Okay, great. Can mark up. I can put a tick beside your name for the evening.
Sir.
Yes, listen. What is the interest? Tell me how you would calculate the interest for December.
Interest will be 2% of the 4,000, which is the balance of the loan remaining.
Okay, and 2% of 4,000 is how much?
80.
80. Okay, just bear that in mind. You notice that under the interest for December, we see minus 80. But let's just go back up to the top. In the net inflow outflow under December, we saw 7,920. Hello? Nobody's speaking to me?
Yeah, we're hearing you, sir.
Sir, what did you ask?
Okay, what is my net inflow outflow for December?
$7,920.
$7,920. Okay, what is my opening balance for December?
9,120.
9,120. Where did that come from?
The closing
balance
for November.
Closing balance for November and the opening balance for December, they are the same. Okay, so having noted those two figures, how much money do we have right now?
$17,040.
When we add those two figures, we arrive at $17,040. And then we paid interest of 80. You remember how we arrived at that figure? How much money would we be left with?
16,960.
16,960. Can we repay, or do we need to borrow money at this point?
We can repay.
We are going to repay. So we're going to repay. We can repay the balance, which is the 4,000. So if we have 16,960 and we repay the 4,000, how much money are we left with at the end of December?
12,960.
12,960. That's what we're left with. 12,906. Okay. Let us now pause. Are we comfortable with the workings on the summary section for December? Are we comfortable with that?
Yes, sir.
Yes, sir.
Okay. Let us now look at our figures under the total. For the quarter, you will remember that we had 478,620 as my total receipts for the quarter, and my total payments was 474,200. And that's how I arrived at 4,420 for the quarter.
Say that again, sir.
How I arrived at that figure. No, I'm seeing 8,800. Can somebody help me with how that figure is arrived at?
It's the opening balance for the quarter, sir.
Right. It's an opening balance for the quarter. But why did I put it back right there? Because the total represents the quarter. And that line that we're in represents opening balances. So where we see this 8,800, it is answering the question, what is the opening balance for the quarter? Now the truth of this, we have to ask it by asking ourselves some other question. When did the quarter begin? Answer, October. And what was the opening balance in October? That's the question. Answer,
8,800.
And so those two figures would be the same. So whatever you have to the left hand in the first month as balance brought forward, we're going to also have it as a balance brought forward in the total column. They will be the same. Now, let us look at the number underneath that, which is the 8,800. When I look at that figure, how did I get 9,000 right there underneath the 8,800, the total column? It's the total loan that I borrowed in the quarter. All I borrowed in the quarter was $9,000. And so that's the figure that I'm going to have in my total column. If there are some other figures, in other words, all you're doing to arrive at your total is adding across in the loan line. That's what you're doing, adding across in the loan line. Okay. If we were to add B20 to D20, we would get 9,000. If we were to add a B20 to D20, we would get the total of 9,000. Now, it's the same principle for the principal. I repaid for the quarter the sum of 5,000 plus 4,000. I repaid a total of 9,000. But because it is repayment, it must be negative. So if I added C22 plus D22, I would arrive at 9,000. C22 plus D22 would give me the 9,000. And the same principle for interest. For the quarter, that's for that 3-month period, I repaid $180 in November and $8 in December. So I repaid a total of $260. So if I add C23 plus D23, I would arrive at the total of 260. So remember, because we're paying out principal and we're paying it, outflows of cash in the context of my summary section will be negative figures. I want to pause right here before I go on. Just to hear if you have any questions. Are we following what's happening, class?
Yes, sir.
Yes, sir.
Okay. Now, when I look at my balance carried forward in the total column, I'm seeing 12,960. Again, my balance carried forward. Balance. My total column is about the quarter. So the question is, what is my closing balance for the quarter? Now, to answer that question, you have to ask yourself some other questions. The first question you're going to ask yourself is, when did the quarter end? And the answer is in December. And the question is, what's my closing balance for December? What's my closing balance for December? If my quarter closes in December, my closing balance in December is 12,960. Those two figures must be the same. But there's a beautiful way to test it, class. Just look on the figures above the 12,960. That is, we're going to start with from E18 to E23. If you add those figures, you come back to the closing balance for December. From E18 to E23. We're going to sum E18 to E23, and we should arrive at 12,906. Suppose I were to create a January column. What would I have as my balance brought forward for January, class?
12,960.
12,960, because the closing balance for December would be the opening balance for January. The closing balance for December would be two things. It would be the closing balance for the quarter, and it would also be the opening balance for the following month, which is January. No, class. Why are we doing budgeting? Is it because I need to give you something to do to keep you busy and off the streets? Well, maybe yes, but there's another reason. You have to one day do this in the context of the department that you run. The HR department going to need a budget. So HR has many parts to it. A big part of your budget will be a training budget. You have to think about the training programs that you plan. What have you discussed with each of the line managers? What is the training need? What are the training needs for those people arising from the staff evaluation? In any well-designed staff evaluation form, there ought to be a line which says, what is this recommended training for this person? So there will be some general training that will come up, which you need to put across. But there'll also be some training arising from the evaluation of the staff members. What are the weaknesses? We don't have people in our organization to fail so we can kick them out. We are there to build on our staff. And one way to build on them is to invest in training. You might have the responsibility for the salaries as well. That will be a part of your budget. The training will be a big part of your budget. So why do we need to do this? We need to, first of all, recognize that it is a planning tool. And HR has plans. Plans that will be driven by HR, but all plans have a cost to it. So we have to project these costs. Some of them we might know because we enter into contracts, and we will fill in the figures based on the contracts. We change the figures if the contract has been renewed and there are new financial obligations. But you have to do a budget. So the thing that you ran from, it is right here with you again. So what I want to urge us to do, and I'm trying to create the environment where we can feel free to ask questions. We're not intimidated, but we have to get comfortable with it. And what better place to get comfortable with it? Here, and then we can translate that to the world. Your budget will not necessarily have revenues in it. your budget will largely be a cost budget. You can be creative and you can have budgets that reflect a revenue stream. Let's suppose that you want to bring down a great John Maxwell, let's say. Let's suppose you want to bring down John Maxwell. You might decide that you're going to be the lead person to it, but you might want to invite other entities that are not necessarily related to your company. And you would bring down John Maxwell, who is a motivational speaker and some gentleman who deals with things like leadership. Anybody ever heard of John Maxwell yet?
Yes, sir.
Yes.
Okay. So what you could do is then invite others. People will be very excited about hearing John Maxwell speak. You can invite others, but those persons who are not related to your entity would then become, they would have to pay. So there have been some amount of revenues to defray the costs that you would incur to bring him in, fly him in and put him up in a hotel, and you might want to give him a vacation if he's so minded at the end of it. Those will be the costs, but then you can have some revenues to defray your costs. So your training budget can mirror some element of revenue, but it will largely be a cost budget. It will largely be a cost budget. And you will have to then fill in the expected figures for it. Training will be a component of it. If you do psychometric testing, that will be another cost that you would have in there. If you administer the things like uniform and wage bill, some departments, it's not finance that does the wage bill, it's HR, then you're going to have that in your budget as well. You might administer the health component of your budget, the group health and the group life, the organization's component that is paid will be reflected in the budget. Bonus might be a part of your budget as well, so you're going to have to have projected bonus. Projected bonus payment based on what you project your profits to be for the year. Now there's something else, team. One of the things that you're going to do, having prepared a budget, you're going to have to do what? You're going to have to, at the end of the month, you're going to have to report on what actually happened. So a budget is about expected, but you and I know very well that what we plan is not necessarily what actually happens. So you're going to have your plan, then you're going to look at what you actually spent. And the difference between the plan and what is actually spent, what do we call it? We met the term before in broad terms. And anybody say?
Is that the variance?
Variance.
That's the variance, yes. Now, your organization probably wouldn't expect you to report a variance of $1. So what they can say is, now this is the finance department, but we can talk a little finance as well. After all, this is what this course is about. One of the things that you can say, we will report on variances that are 10% above or below our target. So if I had planned to spend, if my threshold is 10%, if I plan to spend $100 and I actually spent 105, that's a variance of 5%. How do we get the variance of 5%? It is the variance divided by the budgeted figure. So let's just take that one. I don't want to leave anybody behind. My budgeted figure is 100. You hear me, class?
Sir.
Yes, sir.
And my actual is $105. So I plan to spend 100 on some item in HR, and I actually spent 105. What is my variance, class?
5%.
Not yet 5%. We don't reach to that yet. What is the variance in dollar terms?
$5.
$5. Now, how would I convert that to a percent? Take the formula down for me, please. It will be the variance in dollars divided by the budgeted cost. And we're going to multiply all that by 100. We're going to multiply all that by 100. So the variance in dollars divided by the budgeted cost. And that is equal to the variance as a percentage. So then, if the finance department says that they want variances of 10% or more, would you report on this $5 variance? Would you report on this one based on the example that I used?
No.
I'm not hearing.
No.
No, sir.
No, we would not. We would not. We would not. Is Marvin Spence there? Marvin is absent.
No, sir.
James, you're there?
Yeah. Yes, sir.
Is Natisha Graham there?
Yes, sir.
Okay. Is Daniel there?
Yes, sir, I'm here.
Okay. Lacey, is Lacey there?
Yes, sir.
Okay. So based on that example, we would not report on the variance. So it's not all variances you report on in your monthly report. You'll be guided by what your finance department says. Because your report could become very bulky, reporting on insignificant items. So they would set the parameters for significance. And if they say 10%, then you would report on 10% and above 10%. But you wouldn't report on below. Okay? Did I explain well, class?
Yes, sir.
Okay. Let's have a discussion, class, one that you'll be integrally involved in. I want to put a scenario to you and we're going to have a discussion. The company, you might want to write it down. The company budgeted for profits of $30 billion. the company budgeted for profits of $30 billion. The company made 17 billion in profits for this same period. They made $17 billion in profits.
So did you say 30 million or, oh, never mind, I'm seeing it.
30 billion. That's what they budgeted for, and they actually made 17 billion. Question. Should this company pay a bonus based on this outcome? You heard the question, class?
Yes, sir.
So wouldn't it depend on what their agreement was in terms of how, what are the terms of paying the bonus?
Yes, sir. You take the thoughts out of my head. Because the answer can't be yes or no. The answer must be, it depends on what is expected. No, let's assume that it is based on targets met. You're going to pay based on an amount earned in excess of the target. We have not earned in excess of the target. Agreed?
Agreed.
Agreed.
So in real terms, no bonus will be paid because you didn't surpass the target. But the question is, well, okay, I want to shut up because I hear people talking and I like when my students engage.
Sir, I have a question in regards to the bonus. Lacey.
Okay, who's speaking? I'm not seeing.
Lacey, you're speaking to Lacey Grant.
Lacey, go ahead, Lacey.
Right, so I'm saying, what if is there a possibility that you could have reached your target as an individual, but not as a whole, a company? When you used to get
yes.
And my thing was that you could have reached the targets, but then there was some catastrophic event that caused some excess payments, or something could have. But the people could have met their targets. Everybody could have met their targets.
But something bigger than the targets.
Yes, we had an earthquake in Jamaica, and the building came down on top of us all, or something.
And
but something happened. But the
something like
were
COVID.
met.
Well, it's hard to meet your targets with COVID, especially if you're in a bank and you're selling banking products. It's hard to meet your targets right now in a banking setting. Anybody from the banks?
Yes, sir.
Don't it sort of hard to meet the targets now?
Well, not for my department, sir, because we're online. So everybody kind of goes online for the business. But for everybody else, branch and all of that, yeah, it's kind of hard for them.
So one of the things I can probably predict even before the year comes to an end, that if you got a great bonus last year, it might not be as big this year. And persons touched that point. It could be Lacey who touched the point that it is worth exploring. People work hard. I've heard people say it over and over. They work hard, but they're not getting a bonus because your hard work is hard work and you have met your target. But there's a thing called critical mass from effort. If enough of you are not making an effort, you doing your work not going to cause the organization. In other words, if we're asked to roll the rock up the hill, and you're the only one working, will any progress be made? I think that's a beautiful example. So individuals doing work but enough persons not doing the work will cause the persons who have worked but not seen the reward to lose hope. And we're going to step a little bit outside of our target, our remit, to speak about team effort and the culture of the team. An individualistic culture cannot take an organization forward. We have to build around a team. We have to coalesce around the team if we're going to achieve our targets. So one of the things that you might want to budget for in your organization, if you want to shape them towards a team, is team building. How do we build that team? So some people take pleasure in seeing another person fall and not meet the targets. But you know, that person not meeting the target, or 6 persons not meeting the target, could be detrimental to the 1 person who is meeting the target. So how do we help people? I used to talk to these insurance agents, and they would tell you that their manager would help them, especially when they came in and they were new. The manager would introduce them to people and help them with selling techniques, because guess what? The manager benefited from them doing well. Because the manager would earn, the manager would sell too, but whatever the agents earned, they would get a percentage of that, especially if they surpass the target. The manager would earn a percentage of that surpassed target. This was in the interest of the manager to watch his team succeed. So as we contemplate as HR persons, how we're going to make our team do well, we have to build on the context of what is in it for us. What is in it for us? So as we create more, we have more to go around. If we don't create, then we have nothing to go around. So self-interest is not always a bad thing. Self-interest can make everybody want to work. Because if I want more pay, then it's in my interest to stimulate my team to work. It's in my interest not to hire my friend, but to hire competent people. So there's a word I want you to walk away from this course with, and it's meritocracy. Do we know what that word means, class? Meritocracy.
Mediocre.
Pardon?
Yeah.
What does meritocracy mean?
Something to do with class.
So
Look it up, please.
maybe like I can maybe give an example. You get promoted for the work that your performance, based on performance and not based on favoritism.
That's right. That's right. Now, Giovanni, you wanted to say something? Let's see, the mic open.
No, sir.
Okay, now I want us to reflect. I'm not asking you to tell tales out of school, but I want you to reflect on your organization and just ask yourselves. This is a little touchy, so we don't have to develop a conversation on it. But how do you, the people in your organization, how are they promoted? Is it based on the work, or is it based on because they're the friend of the boss? The boss like them. Some people are promoted. I've heard comments. I've heard 2 sets of comments on people who are promoted in organizations. And one is, they really deserve it, you know. And the other one is what they call a histete, because they know that the person didn't deserve it. Or national honors. You hear 2 sets of comments. You hear a name and a person get national award. And some people will say that person deserves it. And another time you hear the comment, it's because it's a PNP person or it's a JLP person. That's not meritocracy. That's more nepotism. So you're poised in a very unique place, class. You're poised in that place where you can set the culture. You sit at the management table and you sign off on people who are going to be hired. Is this the person for the job? Another thing you might want to reflect on is square pegs and round holes. So as you go through your evaluation, sometimes a poor evaluation don't mean the person must be fired, you know. It might mean it's a marketer in the accounting department. So before you fire somebody, you have to work with them first. You have to ensure that the people who are in your organization are suited for the job that you hire them for. You can't have somebody who likes PR in accounting. And so when you think about your evaluation form, the design of that form that you're going to use to evaluate persons, of course, we have to have some measurable targets, quantifiable targets, but you're going to have some questions that are not really quantifiable type questions, but questions about how does a person feel about the job. There's also something that you're going to need to have, and it is about evaluating the 360 degrees, extremely important. And I want to just pause. Do you have, how many of you, can you just indicate, I don't think that would be a state secret, how many of you work in organizations where the junior staff evaluate the senior staff? Anybody works in that sort of organization?
Not for me, sir. That doesn't happen.
Yes, we have a 360.
360. Hmm?
We have a 360.
Colette, that's Colette?
Belinda.
Oh, Belinda. You care to say where you work, Belinda?
Port Authority of Jamaica.
Port Authority of Jamaica. Okay. And the next question I want to ask, do you feel that what is reported is acted upon, or is it a formality that people go through?
Is that a follow-on?
You don't feel comfortable answering it? Okay.
No, yeah, repeat the question.
Do you feel that, do you see actions arising from the feedback? In other words, when you evaluate managers?
Yeah, absolutely. Before we went to a 360, it was a free-for-all. People did what they wanted, and because there were no consequences, and to some extent, I guess they weren't held accountable.
The managers you're talking about?
I'm speaking of the manager. So when they recognized that it wasn't just about their supervisor appraising them, and it was going to be across the board, more persons were involved, customers, you know, it's other stakeholders and so on. People start to, you know, tighten their belts, change the way to do things, become more accountable, and you see a difference in the organization and in the culture. It becomes more performance driven than, you know, than people just do what they want when they want. So I've seen a change.
Okay, great.
To it.
And so those things drive promotion. So it can't be that you handling my business and it takes 6 years to handle it. And the feedback, nobody acts on it. Because another thing that we need to ensure when we inherit the kingdom, you have to ensure that you don't just have something on paper. Because it happens in organizations, you know. It is that people are evaluated, but nothing comes of it. So let's say that Mr. Roof tell the staff, they tell the students bad words. Every Thursday evening, I'm going to tell them bad words. Him don't prepare himself. And you come back next year and Mr. Roof is still teaching the class. But there's an evaluation in place. And they're organized. Not saying university operates like that. But what we're saying is that there are organizations where the evaluation tool is there, but nothing arises from it. So you have to ensure that when you design your tool for evaluation, that things come from it. No matter who the manager is, the manager must be penalized if they're getting a bad evaluation. That's one aspect of it. The other aspect I want to caution you is how you administer your instrument. Now, can you imagine? Let's talk about us here. Can you imagine I take the form to you and I stand beside you and say, evaluate me? You know, I might not get the right response. I might get what is not true. I might get a glowing report when really I don't come to class on time. I don't teach. I'm not prepared. I don't mark your assignments in a timely fashion. I don't respond to your emails. But because you're intimidated, you say wonderful things about me. So the point is this, that organizations have to ensure that how you manage the administration of the instrument is extremely important. It can't be that it is spilled out on the form that you fill out your regular appraisal on. We have to manage it. So you might want to outsource it. You might want to outsource that aspect of it. Where the junior staff is evaluating the senior staff, that should be outsourced. Or if it is not outsourced, it is done on something that cannot be identified. Because the truth is this, if I'm a bad lecturer, let's personalize it. If I'm a bad lecturer, does it matter whether Giovanni makes the comment or Donna Brown makes the comment? If I'm serious about learning, it shouldn't matter who makes it. If I want to know who made it, then it means that probably I want to victimize somebody. So organizations cannot open themselves up to have managers victimizing staff. So what you have to do, you have to ensure that the evaluation is done, and we don't really have to know who made the comment. The bottom line is we're going to investigate it for the truth content, but we don't have to care. We don't really care who made the comment.
Yeah,
so
we have
sure
to have
yes, go ahead, sorry.
I'm saying, Belinda, I'm saying that you would have to have proper grievance procedures, because you're correct. I mean, managers will victimize the staff if they know that they mark them down. But if you have a proper grievance procedure where, you know, staff can go, and the person who is actually in charge of those procedures are not actually the managers, you know, but themselves who are able to say whether this was victimization or not. Or so it's important that you have a good grievance procedure system in the organization, especially when you have the 360, because I've seen it. I've seen it a lot of times.
Yes, or we have a situation where the only way you can make a complaint is through your manager. But suppose your manager is the problem. How can you make that complaint through your manager?
Yeah, you have to have a...
So the flaw in that, organizations that structure their grievance procedure around that. You have to make the complaint through your manager. When you hand that to your manager, the manager throws it away and it never gets to the grievance committee. So we have to ensure that when we craft our policy, it's a policy that minimizes intimidation and fear. How many of us work in an organization where staff satisfaction survey is done? that is where the staff will mark the organization.
Yeah, it's done where I work.
It's done where you work. And management must take that seriously. No, I mean, there are things that I think are unreasonable. Let's suppose, making a comment that you're supposed to get your birthday off. Maybe something like that. Some people can come up with some unreasonable things while they're marking the organization down. I don't think that that is a reasonable one. Or you didn't get the day off because it's close to the audit time. In such a case, it's reasonable not to get the day off if it's close to the audit time or close to some major deadline. And if you're going to mark the organization down for that, then that markdown needs to be discounted. But there are reasons that the staff can be disgruntled and it should be assessed. The comments should be assessed. Now, who should drive? I think the best person to drive the whole process of improving the staff satisfaction survey should be the HR department.
In our organization, it's the corporate planning.
Corporate planning improves it.
They're the ones who do the survey in consultation with HR, but they manage it. They give us the results and so on. Okay,
but in terms of, if I'm a CEO and I say that, I have to task as a manager with the responsibility of ensuring that it is improved the next time round. It can't get worse, nor should it stand the same. The score needs to improve. Yeah. And that probably ought to be one of the targets that an organization would have. And I can understand why the corporate planning person would have it. That ought to be one of the things that you track. It ought to be one of what you call the metrics of the organization. One of the things that you're going to use to evaluate the performance of the organization, the staff satisfaction survey. Another thing that you ought to use to track the metrics of the organization is the customer satisfaction survey. And I want us to understand something, that an organization must look about the staff if it expects the staff to look about the customers. Literature somehow suggests that the customer is not the number one, it's the staff. What are your thoughts on that? Staff or customer is number one?
Both are important.
Yes, but who you have to fix first?
Staff.
They're both important. I agree with you.
But the staff,
go ahead.
If the staff aren't comfortable, they are not going to give the right service to the customers.
Well said, yes.
All right. So on another note, remember, I was to remind you about something.
Yes, and I'm going to say that I'm letting you out early this evening.
Oh, okay. So I was wondering based on the conversation.
Yes. Okay. The conversation is good on my side, at least. I hope you're enjoying it.
That's why I wasn't interrupted, sir. Yeah.
But we're going to waive it this evening because when it's finished, I'm going to let you know.
Okay.
So we're going home probably an hour earlier or almost an hour earlier, depending on the flow of the conversation. But don't dampen it, because these conversations are important.
No, man, that's why I was waiting, sir, because you had said I should remind you.
Yes, I appreciate it, yes. But yes, we're going to bypass it because we're leaving very early this evening.
Yes, sir.
But it is important that, I want to share with you one of... Marsha, you saying something?
Yeah, important that the staff are happy, reminding you where we were, sir.
Yes, okay, yes.
But I'm sorry, can I, how many people really agree with that? That if the staff, or how many people here in this discussion would give poor service to customers, would pass it along if they felt aggrieved by the organization? How many people would actually do that?
We would not do it, but persons do it.
Yes.
And
but everybody is going to say that. Everybody's going to say that.
Because you go some places, Mr. Thomas, and just the whole body language, everything, you can know that there's a problem something going on in the background. You know, like they'll say, you know, like, I want to go for lunch, and then people know me go for lunch. You know, they make some remarks to you that you know it's not right for them to pass on to you as a customer, you know? So you automatically know that they are not happy. You go into some places and they totally ignore you as if you are not there. It says something about the place that you're in.
Mm-hmm.
So people do it.
So if you don't have a business, you don't have staff. I mean, maintaining your business is important. So
we have to make the staff feel good about the organization. We have to make them feel good about wanting to come to work.
Wanting to come to work is easy.
Want to come to work and work. Mm-hmm. And so, how do we form a culture? How do we create a culture? I had a discussion with somebody this morning. How do we create a culture in our organization where, guess what? If I come to work and I'm not working, and I see all persons around me working, then it's one or two things, and I'm going to become so uncomfortable with everybody doing the right thing and me doing the wrong thing that I'm either going to leave or I'm going to have to change. So how do we create a high performance culture? I think it starts, first of all, with who we recruit.
And
it doesn't end there, but it starts there. Who do we recruit?
Yeah.
And to what extent do our senior managers mirror the culture of the organization? So first of all, this is part of the discussion as in this morning. You have to then begin to create some core values for your organization. And when you define your core values, you have to promote based on the core values. You have to recruit based on the core values. So if a person don't mirror the core values of the organization, they cannot be promoted into senior positions because your managers, your executives set the tone of the organization. What is wrong with this comment? This is a comment that I heard coming from somebody. The organization and the people remain nameless, but I want to make the comment that they made. The person went to a board meeting and they came back to the staff the following day and said, the board said. This is the CEO of the organization saying the board said. Anything wrong with that comment?
Absolutely. There's a collective responsibility.
Say that again, Sophia.
And I said, where is the collective responsibility?
That's right.
He's a part of the board.
He's a part of the board. So if he's a part of the board and he says the board says.
It means he's not in agreement.
It means he's not in agreement.
Just the bearer of the message.
He's just the bearer of the message. Now we cannot have bearers of messages. You have to mirror the core values. You have to mirror the core values of the organization. So first of all, we have to promote people who mirror those values and don't just say it by word, but live it in all respects. And then we have to set these people to mentor. So I'm big on things like coaching in organizations.
Absolutely.
We're going to coach. And a part of confirming somebody in an organization. I'm going to throw this out and I'm going to pause for comments. A part of confirming somebody in a job is that they should mirror the core values of the organization. But sometimes when we see problems out the street, you mustn't bring them in our organization, you know. So again, I had a conversation today about a particular comment that a person made. When your personal life is ugly and you have it splashed on the social media, yes.
Yeah, correct.
People look on those things. People look on your social media pages, you know. And you may wonder why you don't get recruited. Because the truth is this, if on social media you're tracing somebody, my conclusion is, you know, if you and I have a disagreement, you're going to trace me too. And then the question is, do I want such a person in the organization? Do they fit in with the core values of the organization? So you have to start with the core values, and you have to recruit and promote based on your core values. How do we create a high-performance culture? I believe that good cultures must be set from above. Let's simplify that comment. Parents and children. The parents can't be telling the children they mustn't do their homework.
For example.
Homework, the importance of homework must be articulated by the parents. That's what leadership is about. Leaders set the tone. So show me a leader in your organization and I can tell you. And HR people in organizations are very important persons. So when people come and tell me about the HR manager, this and gossip with staff, I can tell you something about that organization. You're all going to be HR people one day. Watch it. No gossiping with staff. And at the end of the day, if we're uncomfortable with the culture, in the name of God, go in peace. Don't stay and spread bitterness and toxicity in the organization.
I think you're assuming that people have options in the same way that people are present, you know, presenteeism. I think that that happens a lot too, because people really don't have options. So they stay and suffer through a situation instead
But if you're
of
suffering quietly and rising to the occasion, but it's going to become
as you say, suffering quietly might be the option, but you know.
But you cannot spread acerbity in the organization.
It doesn't help you because if you give your organization a bad name, you may contribute to driving customers away, which then contributes to your situation being even worse. So it doesn't suit you to do that.
Yeah. I know a lot of people stay because of the option, but you need to be brave, you know. Anytime you begin to hate your organization to the point where you become dysfunctional, because you can hate it and you still operate in a professional manner. But when you begin to become dysfunctional, I think that it's best to leave.
I think so, yes.
It's best to leave.
Agreed.
But you cannot stay. And especially if you're a part of the leadership team. A high performance culture is leading the way. If you are the manager, you must lead the way. Even if their work isn't finished, you must report your deadlines on time. And there are no secrets really, you know. So if you're the CEO shouting at you in the meeting, trust me, it's going to come out. So, what is a high performance culture? It varies from organization to organization, but in broad terms, a high performance culture is one where people, it's no longer we can decide that we're not meeting, but we're exceeding. We're meeting deadlines. And then we extend the frontiers. So let me take one that is familiar to me. One of the things that I'm familiar with is how soon after year end do I invite the auditors to come in? We can talk about a month after year end. The auditors should be here, meaning all the schedules would be ready and the accounts prepared. And let's suppose that that was the target for this year. We can decide that we're going to now build on that. So we extend the frontiers by saying, we're now going to say that the auditors will come in 2 weeks after year end. That means all the balances have to be in, the accounts have to be signed off, the financial statements have to be ready, the schedules have to be ready. It means that you're going to have a consistent conversation with your auditors before year end to find out what is it that they exactly want. I have some auditor friends, you see, and they tell me that there's an agreement that they must come in on a particular day. And when they arrive on that day, the things that they're supposed to get and that they signed off with the people that they're supposed to deliver them on the day, they're not ready. A high performance culture says that, and this is one of the lessons that I got from one of the best bosses I had. This is what my boss said to me, Mr. Roof, don't follow them people. Because I was in finance. He says, soon in the new year, the auditors coming in, and we have to have the financial statements ready. So don't follow them and go to all those parties. In the middle of December, when everybody is going to parties, the finance department had to ensure that they were getting the schedules ready. That's a high performance culture. What's the flip side of the high performance culture? The flip side of the high performance culture is to say to the auditors when they come in soon after Christmas, Christmas just finished with all its excitement. Can you give us an extra 2 weeks? That's the opposite of a high performance culture. Or an association that I am with, low performance. So it was the day before Ash Wednesday, and the system went down. Then the following day was Ash Wednesday, and then the Thursday was either a finance committee meeting or a board meeting. So we turned up for whichever meeting it was. I think it was a finance committee meeting. And we got a note from the accountant that the account was ready. So I asked the question, so why isn't the account ready? Why aren't the accounts ready? And the response was, well, Tuesday the system went down. Are you hearing what I'm saying, class? Tuesday the system went down. Wednesday was a public holiday, and today is Thursday. What's wrong with that statement? How could they have done better? How could they have performed better to make it a high performance culture? The system went down on Tuesday, so what should have happened on Wednesday? Which was Ash Wednesday. What should have happened on Ash Wednesday?
They should have worked.
Not hearing him.
I think they should have worked.
They should have worked, yes, to compensate for the system going down on Tuesday.
And if the system hadn't come back up on Ash Wednesday, at least they could have done is to call to tell you that it wasn't going to happen. They shouldn't have you turn up.
They didn't say that it didn't come up on Wednesday, you know, because they could have said that.
Mm-hmm.
It was the fact that Wednesday is a public holiday. So I suspect that the system was there on Ash Wednesday, but because it was Ash Wednesday, they weren't going to work. So they came for the finance committee meeting, and there was no finance committee meeting. But I want to take it further. What is the response? Unfortunately, slavery is alive and well, and discipline comes, I'm a firm believer that discipline comes in two forms. Well, we need to walk with a carrot and we need to walk with a stick. And we administer them at the appropriate time. Comments?
But that has a lot to do with leadership, you know, sir.
Characters.
Also, I'm thinking probably if there were consequences.
Yes, consequences would be the stick. In a case like that, then we use the stick. You know the term carrot and the stick? We do it. Are we familiar with that term, the carrot and the stick? The carrot is the reward. Think about a rabbit. You give them a carrot to eat and they'll do whatever they're supposed to do. The stick represents punishment.
So, sir, would you consider that the plantation culture?
The stick, you know, some people only respond to the whip. So, for example, maybe, you know, let's take this example here. I report to Ms. Thomas on certain matters. So if Ms. Thomas wasn't in this thing and I'm you know, seized of this plantation culture, maybe I wouldn't turn up to class. That's an example of the plantation. Ms. Thomas is here, so I turn up for class. Maybe any day she don't turn up, I don't turn up. How many of us take time off when our boss is there? We come to work later because the boss is not going to be there today. That's a plantation culture, you know.
Sometimes there in some organizations, the consequences just never get applied.
The consequences never get applied.
They don't exist.
And then persons just do whatever because they've been getting away with it. And then those who would have been going above and beyond starts to become demotivated because they see this other person, you know, probably getting the same pay, enjoying the same kind of benefits, but not pulling
the weight.
And so they get demotivated too, and often they start just giving bare minimum.
That's
or
right.
the basic level performance, you know, enough just to get by.
That's right. A lady said it to me once. She was so demotivated. She said she just did enough to prevent herself from being fired. Now, if we have enough persons in an organization, and what that means is the bare minimum. We need to look behind that. What is it that causes people to only do the minimum in an organization? So that's a problem for management to solve, you know.
Mm-hmm.
And sometimes the staff satisfaction survey, it must be probative. It must be probative so you can find out what is it in people's mind, why they're only just doing what is needed to keep themselves in their job. Organizations never become great if you have enough persons. If there's a critical mass of persons who are doing just the minimum, they will never, that organization will never soar. And that is why I'm firmly of the view that the staff, as I think Marsha said earlier on, they're equally important, but we have to give the edge to the staff. And the staff will then ensure that the customers are happy. And we have to build a culture of effort translating to something. I'm told that one evening, one of the food places in the airport in Montego Bay, flights, because of heavy rain, the flights had backed up. And there are a whole lot of persons in the airport hall. And at a particular hour, one of the food places was closed and the staff went home. And this would have been a great opportunity for them to earn extra. And I reflected on it, when I heard about it. I said, you bet that whether that served extra or not, brought in extra money for the company, it would just have been the regular pay as usual. How do we make people feel where it counts the most for the efforts that they bring to your organization? We need to build that into the way we operate. People must be rewarded for the efforts. So this discussion goes back to the meritocracy that we want to build in our organization. How do we reward those who have done good work? And how do we create the differential for those?
I think that's why, sir, a good performance management system is important.
Yes.
So that persons can have a realistic idea or measurement as to whether or not they're actually doing good work, if they're,
Yes,
if
you
they,
have to define good work.
right.
You have to define good work.
You might feel that you are busy. You have circumstances where you might feel like you're exerting a lot of energy, but you're really not accomplishing much. But because you're exerting all of this energy, you feel as if you are such a hard worker, and so demotivated when you're seeing the other side or hearing the other side as it relates to your output itself.
Yes. So how do we get around that? Because I've heard some people say, boy, I'm not getting promoted. I've followed certain situations where people, they're really tired, they're really doing a lot, but they're not achieving anything. And they mistake tiredness for doing. And that can only happen in an organization where you don't have quantifiable objectives. I liken it on to somebody who takes a penknife to cut at a tree, the bark of a tree. Believe you me, you'd have expended a whole lot of energy at the end of the day, but would you have made any serious inroads into cutting down the tree? No. One could argue that you don't have the right tools to do the job. And that's a part of the problem sometimes. You don't have the right tools to do the job. But sometimes it is that the job, what is expected of you is not measured, it's not specified. So we need to build a culture where at the beginning of each year, in signing off on what is expected, what are the targets, what are the deliverables for the year, we discuss it. The deliverables for each year must be clearly stated. And this is a strange year. Maybe we've redefined the deliverables in the context of COVID, but they can't just be up in the air. We should have really gone back to the drawing board and said to the staff, COVID has come around. So we're going to put an emphasis on, we're going to create some new deliverables in the context of COVID. But we have to sign off on the new deliverables. And COVID has made many things that was planned because the planning cycle would have happened before COVID. So how many organizations just sat back for a while and asked themselves, Are the deliverables that we signed off on still relevant? What may well happen in a lot of organizations is that they may look on the ones that we can't evaluate you this year because we went off target. You could have had a very viable evaluation in place if you had met on the advent of COVID to decide what are the new priorities. Because a lot of the foci had to shift this year. And nothing is wrong with the foci shifting. But the question is, what are the new deliverables arising from this pandemic? Let's sign off on them because we're going to evaluate it based on that. Who's speaking?
Marsha.
Yes, Marsha, go ahead.
And a lot of organizations, they have outdated processes.
Yes.
They have not done any form of improvement in many years. So where you could be working smarter by making some adjustments to the processes and possibly automating some, they are still doing things the old way. And they are not produced. So as I say, they look as if they're working hard, but there are many ways they could have made the job simpler.
Yes. So I know an organization that actually, because their automation level was so low, when they had staff that had to remember when Spanish Town, St. Catherine was under a lockdown.
Yes.
Those people were on holidays really because there was no interface between the home and the organization, technological interface. They couldn't do anything because they weren't linked up to the office.
True. That's true.
So for 2 weeks, I think it was 2 weeks that there was that lockdown, was it? Or was it 4 weeks? Whatever the period, 2 or 4 weeks, nothing could happen in that organization because there was no technological interface between home and office. So that supports your point, Marsha, that organizations need to see how they're working smart. That was not meant to be a holiday. St. Catherine on the lockdown didn't mean that organizations are on the lockdown as well. Because if it was so configured, people could have worked from home effectively. So that's a good point. We can
sorry, sir. I know like the like hourly paid persons would just lose income because of the lack of automation.
That's right. Yeah.
They would become demotivated. So it's going right back to your point. Where they
so when you hear people say that they're overworked, sometimes you have to look into that. And of course, one of the areas that you have to look in is the processes. Is it that I'm carrying water on my back when I could have automated the movement of water? When you hear your staff, when you hear your customers complaining about the slowness of them doing business with your organization, that might be an invitation to look at how you're doing things and to see how you can make it more customer friendly. That's why these surveys are so important. I'm looking at a question, very insightful question. Does a plantation culture still exist within Caribbean Jamaican organizations? I'm tempted to believe that it does. Do we still need the carrot and stick? Yes. Who's on? Someone saying something?
I said, yes, it does, sir.
Yes, it does. Now, do we still need the carrot and stick model? But to the extent that we don't, and I want to throw this out, this is a HR question, and so I want to throw it out to you students. To what extent can we recruit for people with a strong work ethic? Is there any way that we can pick that up in an interview? Because I think that if we recruit people with strong work ethics, then we don't need a carrot and stick approach, you know. All we need is the carrot to reward. We don't need a stick to beat people to work and to punish them. So to the extent that we can maybe administer some tests, maybe we can do something, Olivine, I don't know. We can develop something where we can pick up a person's work ethic from psychometric testing. I don't know.
We're trying to design a study now where we're looking at testing all the students in the MSc HRD program, all the students who have come in since this year, and for the next 5 years, development plans for each of them, and then doing a tracer study for the next 10 years to see what sort of careers they have.
After 5 years.
Yeah. We're looking at something like that now, but of course it's a whole lot of work, and I'm reluctant because, you know, I really don't want to be doing anything more, but it's something that I'm curious about, and I've started testing some people in the first year. We'll see how far that goes.
But that would be interesting though, because it would answer that question that was asked further up about the plantation. I think that if we have people with a strong work ethic, then we don't need the carrot and stick up.
What I think is if they have direction, because you see, that is what I think the problem is for some people, you know, they really don't know what they want to do or where they want to go. This study came, let me tell you, I sit in classes the same way I sit in with you. I sit in Sophia Morgan's class on a Monday. And she was talking about testing, and this class, people in this class would have done the Myers-Briggs and the other. And because I was there, we started talking about the fact that we do psychometric testing in the unit. And we just asked, you know, the number of people there who are happy in their jobs, and we were shocked. Number of people who were not happy in their jobs. And so I offered some free psychometric testing, and people took me up on it. And then, of course, it has snowballed because we've come across people who don't want to do any, or they don't enjoy anything at all. I mean, in the test that I gave, they had 180 statements for people to suggest jobs that they would like doing. And 3 out of 180, you sort of really wonder, you know? So it's coming out of things like those, that there is some need for some intervention. But of course, the question is, who is to do this intervention? Because it looks as if it's going to be a lot of work, and we really don't have the resources.
The resources to do. But there are 2 ways, Olivia. We can look on it. Why is it that, let's take me, why do I not like my job? Is it that I don't really want to be lecturing, I really want to be selling? That's one reason. So I'm like a square peg in a round hole.
Exactly.
Or it could be that I really want to lecture, but every day my boss tell me bad words. It's all hypothetical, class.
I know. I know, but that is it. That is why we're doing it, to see what the issues were. And then having come now in the fact that you don't like your job and you don't like any of the other 179 jobs we're suggesting, we want to see other things about you. So we want to look at your personality. We want to look at your intelligence. We assume you're intelligent if you're in a master's program.
Yes.
We want to look at other things about you. So, you know, and this isn't one person. That's the scary thing.
Basically, if we can solve that problem, I think the other problems about it, we don't need a stick if we have motivated persons. Because a motivated person's response is, well, I don't really care whether the boss is here or not. I'm turning up for work tomorrow morning at 8:30.
Which is why I told you, which is why I was suggesting that it is 2 broader statement to say that if the staff is unhappy, the customers will be unhappy. There is something internal in some members of staff which will give good service regardless of the context around them. That is why I was challenging that statement earlier.
And so the person with a great work ethic, the good work ethic, the positive work ethic will
work with or
not hate the job but still deliver.
Deliver, yeah.
But unfortunately, I haven't done any testing on it, but I suspect, that's what I can say, that persons who are demotivated not going to do the best. Most persons. And I say that, and of course, I will be guided by what a survey would ultimately show.
The PhD that I was doing was to try to understand people who circumvent systems and processes and develop themselves to a high degree, regardless of the context. That is the sort of work that I was trying to do. I need to get back to it, but that is what I was looking at. Looking at people, as I say, who undermine the power structures to do something despite the situation that exists around them.
Yes.
So it is something that we need to understand, because there is no study really that you have things that are tangential to it. There's nobody who is really studying it, because I can tell you, whenever I've done my 3 presentations and people are excited. And I remember I went to the employee engagement conference one year and people asked me about the study. I mean, I didn't go there to talk about my study, but people had heard about it and they were asking me what I was doing in my PhD. I mean, that was quite shocking.
Actually, I like that subject. And I think the findings would really be revealing and something that organizations could piggyback on to take their organization to that other.
I know everybody is waiting for me to finish it, believe me.
Yes.
Believe me. I've had people offer to supervise me. People from outside of Jamaica offer to supervise me. So I know I need to get back to it.
But I like this last comment. We only need to have carrots, but we can't just have carrots. We have to work to only have carrots. Because there's a danger in only having carrots with a bad system. What it would mean is that we're going to be promoting people, rewarding people who have not done the work. So we have to create the environment. So we get to that point where we can put down the stick and we only need to have the carrots, but we're not quite there until we get some other things in place. Anything anybody wants to say? Just one question on the assignment. Are we clear on what is expected of us in the assignment based on what went out afterwards? It's important that you hear the question I asked so you can respond to it. Are we comfortable with what is required of you in the assignment? And the other question is, are the teams working? Is there any quarrel in any of the groups?
No, sir.
Isn't that a part of a group, sir?
Pardon?
Isn't that part of a group? Isn't that part of being in a group?
To have quarrels?
Yes.
Okay, I'm talking about, without saying it, I'm talking about the quarrels that cripple the group.
Oh, okay, that's a different.
Yes, that's the sort of quarrel I'd be focusing on. Of course, you're going to argue about the point, what points to put in and so on. And I am not really concerned about that, but I'm concerned if you're not moving with the assignment that's due on Tuesday, the 27th of October, because you're crippled by quarrels. So I'm talking about the crippling quarrels rather than the healthy ones.
Okay.
So if we have no more questions, we can bring the class to an end. But if you have questions, please, please stay back, and I can take your questions. Marsha, you had indicated that you had some questions.
I sent you an email. You saw the email?
I saw it, but I didn't open it. I saw it just before the class.
Okay.
So I didn't open it. So I said I'd acknowledge that and invite you to ask your questions.
And
Class,
I sent you a message in the chat from a student.
okay, saying that they would not be here this evening.
Right.
Yes, I saw
that. Okay.
I saw that, yes. Okay, if there are no more questions, we're going to bring the class to an end.
Okay, sir.
Yes, so.
Okay, sir, good night.
Yes, good night. Next week we're doing job costing. I think there's a job costing question on the sheet.
Okay, sir.
One of them.
Yes, I can't remember the question, but there's a job costing question. And I think I sent you something as well on companies. I think I sent that out. A company on a clothes dropping a part of the line. Or maybe I didn't, I don't know.
We'll have to look at that.
We'll check.
You and I could confirm, and if not, we'll send it out early. And if you have that,
Yes.
remind which one it is. We'll indicate which question it is.
I'm doing a fair amount, so I'm not sure if my mind is a little crossed on that one. If I sent out a question to the class, like on Tuesday or so, I can't remember, on Monday.
No. Well, it wouldn't have been through me.
But it would have been through you if I did.
No, so
I
no.
remember seeing anything.
Okay, so maybe that's a figment of my imagination. But we have what to work on Trisha, I think I'll just have to speak to you, and what I convey to you, you'll relate to the class. Okay? Okay, so that's it for the time being.
Night, everybody.
Yes. Okay then. Okay.
Good night.
Good night. Yeah.
Night.